program on Friday. At the time, 100 points sounded like a lot, but I'm wondering whether or not you think they got even this right.
I think they got it right. I mean, obviously, I think that it's too little, too late for a lot of institutions. When I look at what Bank of America, the disaster recorder that they reported, and I look at the disaster recorder that Citi reported, and the disaster recorder that Merrill reported, it's good to see that there's a pulse over there. And I think that it's a good start. Obviously, we need rates even lower because we waited so long that you have to take more emergency action. But look, I'm never going to tell you that it's a mistake to go 75 or that it's an emergency meeting. And it's good to see that they recognize that things are pretty awful.
So, Jim, they couldn't give us 25 more that the markets wanted back on December 11th. They couldn't do that, but they can give us that much has changed in 5 weeks. Do you feel real confident in the steady hand of this Fed at this point, Jim?
No, not at all. This is obviously the kind of action that I was most fearful of, which is that they would have to go panic and that they would get way behind the curve. But, once they do it, I'm less I can't hammer them as much. This is the kind of action that had they done it 3 months ago, we would have been safe. But the last month the month of December and the month of January are just turning out to be just total disasters. And if they didn't take any action, then we know that there would just be no bottom whatsoever to the stock market. I'm saying if they didn't take any action, we'd be down 2,000 points. So, we're certainly going to trim that prognosis.
Jim, we've got Greg Ip on the phone. He's joining us, covers the Fed for the Wall Street Journal. Hey, Greg, good to see you. You've probably heard the assessment so far. Yeah, 75 basis points is good, but too little, too late. And Cramer's assessment, and one guy even wanted more, and Fed funds futures are saying give us even more.
Well, they may get more. I mean, clearly the message Bernanke gave us a few weeks ago was he was going to throw gradualism out the window. He was going to give us easing. And the view that I got was that it was going to be front-loaded. There's no question in my mind that they would have preferred to wait till the meeting in order to move as
Wait a second, Craig. You were saying in your article 3 weeks ago that they were more worried about inflation. This is not the impression that you gave us whatsoever.
Well, a lot obviously changed in the last 4 or 5 weeks.
People say.
It's
like, no one was saying that it was this urgent. I mean, it's finally that they kind of woke up. But, you were putting out stuff which just says that they were saying, look, the risks are balanced. I mean, the risks were never balanced. It was totally in favor of a complete and utter collapse. Something changed, at least from the stuff that they were putting out to you, because your stuff was totally the opposite.
They had a view, and that view has turned out to be wrong, and they have responded accordingly. Now, you might be right, Jim, in the